Welcome to Officer 24/7. My name is Niharika Walia Bhatnagar and I am with you with the area of accounting and financial management for bankers. So today I'll be talking about the next level of AFM. I've talked about the basics of AFM in the last class. So I'll be looking forward to it further and we'll be starting with the concepts today. Let's see how much time we have. I'll try to finish it up today, but maybe it would go to the next class as well. So we'll be looking forward towards the concepts and the principles of accounting along with their MCQs accordingly. Okay, so let's begin with the class today. And if you like this particular session, then kindly go ahead and share it among your peers and don't forget to like it. Thank you. So let's begin up. So today I'm going to talk about the era of, first of all, we'll be talking about bookkeeping. Number one is bookkeeping. Number two is accounting, and then third one is accountancy. So today I'm going to talk about all these three terms. First term is called bookkeeping. What does the term suggest? The term book suggests that we are maintaining a book. So bookkeeping is all about maintaining. Okay? So it's all about maintaining. So whatever we talk about this area is, number one is maintaining the books. Maintaining means whatever is happening. Good, bad, profit, loss, sales, purchase, expenses, losses, whatever is happening, note them down. Bookkeeping doesn't really require a lot of analytical skills. It just requires the basic skills of accounting. That means the basic rules of accounting should be known so that you can just maintain those books. You can just jot down those basic details, right? That is bookkeeping. Second thing that comes is after bookkeeping is accounting. What do you mean by the term accounting? If I talk about the term accounting, what does it exactly say? Accounting can be stated as something which is the analytical level, where you actually look at it in terms of summarizing it and interpreting it. See, as soon as I saw there's a purchase, there is a sale, there is an expense, there is an income, I'm noting down all those things. I got capital into the business, that is the money the businessman is putting into the business, that is called capital. If he's taking money out of the business, that is called drawings. But this should be for his personal purpose only. That is drawings. So bookkeeping, summarizing and interpreting, all these things would be taken together. And then we have bookkeeping, accounting, communicating. That means at the first level. In terms of bookkeeping, I can say, first of all, I would say that I scored this much amount of marks in each subject. So I'm taking 1, 2, 3, 4. 4 subjects, different marks. So the marks are stated here, that is only a part of bookkeeping. Then if I look at it, what is the total percentage that is coming up, right? Number one, what is the aggregate coming up? Aggregate in terms of percentage, that is accounting. But over the period of time, how much I have improved, what is the trend, and how this particular report card would be presented to my parents, that is accountancy. Okay? First is just mere noting. The next one is just analyzing and summarizing it, creating a total out of it. And the last one says get into this particular scenario deeper and you have to provide the information to the ultimate users who are in dire need of this information. ठीक है ना? चलिए, now comes the next point. Once this is done, what's the next point, everyone? Then these are the various concepts of accounting. So there are three things, everyone. First is a few things that are assumed. They are called assumptions. A few things are called principles. And can you see there's one more term that is written here? Everything else is written as concept, but there are certain things which they called conventions. Visible, everyone? I'll be talking about these things individually. I think if you want to take, then take a screenshot of it so that you can actually understand these topics well. Okay? So there are two things to be understood there. First is at the recording stage, and the second is at the reporting stage. When we are recording something, there are certain rules that we have to follow, and at the reporting time, when we have to report it, there are certain rules that we have to follow again. But how is this convention different from concept? Acha, whenever we study something, have you seen whenever we studied about any theories, anybody who's from the economics background, or you must have seen some theories, they say other things remaining constant, this thing is like that. That means there are certain variables which they are not changing at all. है ना? For example, if I did any experiment, I am doing certain experiment. While doing the experiment, I will be keeping a controlled environment or an environment which is extremely variable. I will do everything in a controlled environment. Reason? Because when we study things in a controlled environment, they turn out to be better. Because you are looking at one particular impact only. Now, you are not considering the entire environment together and then trying to study the impact. To study the impact, we have to pick up things individually, isn't it? So at the recording stage, the first thing that will happen is cost concept. What do you mean by the term at the recording stage? So they are basically assumptions. Before I move on to the cost concept, there are certain things that we assume that these things are always going to be there until or unless there's an exception. Rest everything can change. So among them, the first one is going concern. Then we have the area of money measurement, business entity, and one more concept which is I think missing here, that is called accounting period. Okay, there it is, accounting period. So these four are which I have marked, these are considered as assumptions. We'll assume that these four things are always there. Then the remaining ones are regarding principles. There are certain things that we learn from our families. For example, if I say there are certain principles that I follow in my life, that is the way accounts also says there are certain things I follow. That is the principles of accounting. Then if assumptions are done, principles are done, then what do you mean by the term convention? Convention is certainly something which I can say is, conventions are those things that are going on in the market. If I can say, that is the kind of trend that has been being followed from quite a long time, from the period which the people belong to the previous period, previous way of working. We are still continuing with that. So I can say convention is the way of working which was taken up by the people and they are continuing further with it. Okay, so there are two kinds of things. First is whenever we are working, so there are a few things that we assume, a few things that we should follow, and there are a few things which are already being followed in the market, and that is how we have to go with the flow. Hai na? So these are the basic concepts. Now the next point, these three had been regrouped further. It is said, first of all, there are certain things we need to cater at the recording stage. When we are recording the journal entries, journal means the transactions. Transactions can be related to sales, purchase, selling, buying, all those things. So they are at the recording stage. Second is at the reporting stage. When we are supposed to report at that point of time, we have to record certain things. So there are few things that we'll record and few things that we will report. Okay, when we have to report, then there are certain things we'll specify, sir, this is like that only now, please don't come to me after that, I'm disclosing the things beforehand to you, right? Now comes, what do we record, what is it that we have to take care of when we are recording? Okay, so I'll be starting with these areas, that is these cost concept, money measurement, business entity. I'll be following it in that manner. So let's proceed further. I think if you would like to, then go ahead and take a screenshot of it as well. This will help you to understand the entire topic. And there it is. Okay, now when I'm talking about the things to be recorded at the things to be catered in a proper way when we are noting down things at the recording stage. So let's start with that. Number one, that is called cost concept. What do you mean by the term cost concept? Cost concept means whenever we are recording the things, always record the things at cost price. Do not look forward towards the market price of those things. See, in a business, when I purchased raw material, the value of the raw material for which I purchased was rupees 100 rupees, say. I bought it for 100. Every day, the price of the goods are changing. For example, at this point of time, the vegetables have gone at a little higher price because of monsoon. So, if I am someone who is into the event management area and I am into the catering as well, we have a catering region and the catering department takes care of the buying of the vegetables. They bought vegetables for rupees 100, say. Right now, the value of the vegetables is gone to up to 150 rupees. So, shall they change that part? Do they really have to do this that nine, it's not 100, it is 150 now. Later that day it went up to 180, so they will write 180, and then but just after the monsoon is over, everything comes back to rupees 60 or 70. So shall we record things on this basis? If we start recording the fluctuations in the market price now, I don't think the accountant will ever get free time where he can actually look at the analysis or give the information to the organization regarding these things. It's something that he'll be totally preoccupied with. That is why they say when you purchase something, you record that cost price right away. Right? So we will record the cost price right away. We will just take care of that particular cost and we'll note it down. After this, if the price changes in the market, whatever happens, goes up, goes down, none of those things concerns us. We will record only and only when we are purchasing the goods, the price we paid. After that, everything becomes irrelevant. Right? So every business transaction is recorded in the books of accounts at cost price, irrespective of the market price. All the monetary transactions are recorded at historical cost. Historical means the cost that we paid when we were trying to buy that thing. Whether when we bought, we were not trying, we actually bought it. So when we bought it for a certain price, that price is stated here. Now, this is actually an assumption, even in a very important concept of accounting. Acha, everyone, if I talk to you and you ask me that how's your business going on, I said average. And by average, you said what is average according to you, ma'am? Mine average can be 15% returns or 20% returns. Your average can be 60%, maybe 50%. So everybody can have a different average definition. Then I ask you that how much do you earn? You say good. So now the point is, what do you mean by the term good? No clue. If you ask me that, ma'am, how's the sales turnover going on? I said it is increasing every year. Now, is there any quantity definition in it? The point is, if I go to C and I ask him that please file my return, now he'll ask, what's your income? And I'll say good. So how can he file the return? He cannot. Technically, whenever we are maintaining the books of accounts, it's all about money. Anything that can be quantified. Anything that can be quantified is something that we cover under money measurement concept. This concept clearly says whenever we want to record something, we will record it at only one point. Money measurement concept says record anything which can be measured in terms of rupees, in terms of money. So every transaction that is recorded in the books of accounts should be measured in money. So all the transactions that are converted into a common form, which is money. For example, if I say quarterly sales, quarterly production, I said we produce 10 lakh rupees worth goods, sales, wages. What are these? These are all money based things, something that can be quantified. So something that we can quantify would be covered in the money measurement concept. Okay. Now comes the next point. This is a very interesting assumption and at the same time a very important one too. This is something that every business assumes. See, I am Niharika. I opened a business. I am Niharika and I got a business. I started a business of handloom, say. I started business of handloom, which is named as Niharika and Company. I started it in my name only. It's just a basic organization which is run by me, and I put the money into it and I take the money out of it. There's nobody else. I'm just the only person. Now, will you treat the business and the business person as two different entities? Technically, you should. Why? Because if Niharika gives money to the business, Niharika can also give the money to bank. Bank will pay me an interest rate of at least 7% right now. 7% to 8% I can get. You know, especially if I put it in the name of my parents as senior citizens, I can get more. So technically, whatever money I'm giving to the business, I am weighing it. That acha, if I don't give the money to the business and I give it to the bank, or maybe I put it in the market, I believe I can earn more, isn't it? So when we talk about the business entity concept, this concept clearly says that whenever we are working, we will put money into the business. So the business and the business person, they are not the same. They are two different persons. So Niharika and the Niharika and Company. It is just written Niharika and Company. It's not actually a company. It's just a name there. So I opened up a business. So whenever I gave money to the business, it's called capital. The moment I said that, array, I need a little money for my personal use. I have a specific function at my place, so I thought let's take the money out of my business. And I decided to take the money out of my business. So the point is, now the money is still mine, or now it belongs to the business. Since I gave this money to the business, so technically this is not my money anymore. Now this money belongs to Niharika and Company. The day I decide to take that money out of it, now the business is going to note it down as drawings. That means the businessman is taking money out of the business. So the crux is, the business and its owner, they are not the same. The person gives his money to the business to take care of it. So technically, in this case, what will happen? In this case, Niharika and Company are not the same. Okay? So that's the crux of this entire portion. Done? Now, just a moment. Okay, now let's continue further. The point that comes is, in terms of the business entity concept, the business and the business person are two different persons altogether. So that's the business entity concept. Right? Done? Okay. Now, after this, the next point that comes is the business entity concept theoretical form. This concept separates the entity of the proprietor from the business transactions. So business and business transactions are two separate things. So the point is, business is different from Niharika. The capital which is contributed by the owner, it's called capital. The money that I give to the business is called capital. And if I take the money out of the business, technically it's still my money, not something that the business owns. But since I've given to the business, now it belongs to the business. So it is an artificial person which is different from the owner. Okay? Done? Now, this is the theoretical portion. Now, the next concept says realization concept. Realization concept says that whatever you earn, record it only after that. Think about it. There's a particular person who's just passing by, and I think that array person is coming to our organization, so record it as a sale. What will a wise person say? The wise person will say, kindly do not record it right now. Wait till the time the actual sales is made. If the actual sales is made, then record it. Otherwise, please do not. है ना? So realization concept is something, this concept tells us that in revenue treated as realized or earned, it is treated as realized or earned on the date when the property in the good passes to the buyer and he becomes legally liable to pay for the goods. So in this case, when we talk about the realization concept, this concept says that in terms of realization, we can record things in terms of the books only when things actually happen. Till the time the sale is not made, wait for that time. Na? Once the sale is made, you have got the bill in your hand, then ask the person that, sir, your amount is due. Business, kindly record it, we have made a sales. So till that time, you shouldn't record it. So you should wait till the time the sales is made or the income has become certain. The certainty element is included in our sale. So when we buy and sell something, only then the amount should be recorded. Realization concept though is more related to the area of cash. Okay? Now, a very important principle of accounting, which is called dual aspect principle. As I told you in the last class only, the Luca Bartolomeo Piccioli has given double entry bookkeeping. Double entry bookkeeping means everything has two elements. Every single thing, every single transaction will have two elements. That means one thing would be a debit, the other one would be a credit. So these two things will be there in the business in any case. This concept explains that every transaction has a double effect. Everything is going to have double effect. For example, in this case, debit and credit is basically your left hand side and right hand side. As I told you, if I put 100 rupees in the business, now what the business can spend is rupees 100 only. If I add 100 rupees more, now business can spend only 200. If I add 100 more, business can spend only 300. Whatever you put is whatever you can spend. There is no other thing in terms of this entire working, right? Clear? Okay. Now, look at this. Huh? When X started a business with 50,000, the business has an asset of 50,000. Liability of 50,000 as capital. Let me just clarify. I wanted to buy a laptop for my business. So what I did was I brought money into the business. I call it capital. So technically, I got a capital of 50,000 and I used the entire 50,000 to buy my laptop. So then I got an asset. Asset is something that generates money for the business, not the goods, because we sell them and get money. That is something that is an aid that helps to generate money. Aid means a help. For example, the furniture in the showroom. If I'm a handloom seller and there is a proper furniture where I am showing there are proper racks in which you can see the entire goods and everything is displayed there. That particular rack I'm not selling and getting money, but that helps me to generate money. So that is an asset. So all these assets, for example, car, building, office furniture, everything is a part of an asset. So if I put 50,000 money, I have got an asset of 50,000 na. So the dual aspect concept clearly says that we have got an asset. We need to pay it to the owner someday. The owner is basically Niharika. Now the business owes me 50,000. I am different and the business is different. If anybody asks me that, ma'am, what have you done? I said, I have invested 50,000 in the business. So that 50,000 the business owes to me. Whenever the profit comes, I am the first person who has every right to get that money. You know? So that is dual aspect concept. So that is dual aspect. That means double aspect. Everything will have two things. In terms of double aspect concept, now there is called a balance sheet equation. That means whatever you put into the business is your own money, is capital. If I ask other people to help me, they call it liability. And the total becomes assets. Because if I get my money, I ask someone else to give me money, that total thing becomes asset. Asset means the money that is being used in the business to generate more money. Okay? This is asset can be said as an investment that we make in the business. In terms of we are keeping it in the form of cash, in the form of bank balance, in the form of the equipments that we are using. So all these things are assets which are helping in generating money, right? And capital is my money and liability is the money which other people give to the business. Done? Okay. Apologies regarding the particular screen thing. Okay, here comes the next point, everyone. One is called historical records concept. What do you mean by historical cost records? Historical records simply means that we do not record things of the current year. If you ask me that what kind of accounts I am providing you, I am not providing you the accounts for this year. I am giving you the records for the past year. That means usually whatever happened in the past, we record that in our books of accounts. This is the assumption that we make in our businesses. Okay, so that is something that we involve in terms of our business. So I can say this is based on the assumption of realization. Accounting involves the recording of business transactions that have taken place already. So that means those things which have already happened in the past, we will record only that. And technically, if this is what financial year. Now, if you are filing your income tax return, it's for 22-23, not 23 to 24. While the financial year that is going on has started from 1st of April and will end on 31st of March. So we will provide the information for the previous year, not for this current year. That is why we say these records are old. It is 1 year before. Not the current are given to it, given, because I think we cannot compile those current records right away and give the total profits or losses of the current stage. It requires a lot of time now. So we take after the completion of the books, we will submit them accordingly. Asha, next pointer. Next is going concern concept. If I start a business and you ask me that, ma'am, how much do you expect your business to go to? I'm like, I don't know. Maybe it can end tomorrow. Maybe it can end day after tomorrow. You'll be like, why should I put money into a business where the businessman himself is not sure? Will you put money into my business then? Chances are less. Going concern concept indicates that the business is going concern, means the business is here to stay for a long period. It's an assumption. We are assuming that the business is here to stay. Every single night when we go to sleep, we don't even know whether we'll wake up tomorrow or not. But does that mean that we will not prepare our clothes for morning? We will not prepare everything for the morning routine at all. We'll just start every routine every single day when we wake up, right? I think you'll see so many wives there who are preparing the food for the entire family. The people who are living alone, they know that in the morning we don't have time. It's better that by the time I wake up, everything should be ready. Do you really think business will go to any extent and will not be organizing itself for the next year then? They will. For example, whenever it is 31st of March, the books of the accounts are closed of the bank on 31st March. Na? Whatever the books of accounts of the closing is done, the same is automatically taken to the next year, which is the next day, that is 1st of April. Nobody says that after 31st March, I don't know whether the business will survive or not, the next day or not. So I will not carry forward the books. I will not close the books completely. There is nothing of that sort. You assume that tomorrow morning we'll be starting again. That is why when we get assets for the business, for example, I got this laptop. The laptop at least survives for 3 to 4 years right now, right? So after 3 to 4 years, I'm assuming that my business is going to continue for at least 3 to 4 years. If I assume this as a business, then at least 3 to 4 years, my business is still going to be there. है ना? So this concept indicates that the business is a going concern. My business is going to outlive the life of the asset. This means that the business continues its activities as usual and transactions are recorded accordingly. If an expense is incurred and its utility consumed during the year, it is treated as an expense. Otherwise, it is recorded as an asset. I got a pen now. I've got a pen. So this is my pen there. I've started using this pen. I think it's been not even a week right now, but I can see the ink has started decreasing because you use it a lot, right? We are in this profession, we are learning a lot. Technically, if I've got a pen, this pen will not even survive a month. Agreed? You are also working in the offices. You must have seen stationery is consumed like anything. That means these pens and all these are consumed very easily. So this is an expense. The benefit can be over within a period of less than 1 year. While if I get this digital pen and digital pad, okay, that is my digital pen pad. This, do you really think this will just live for 1 year? This digital pen tab is going to be there for a good amount of time. If nothing happens and the technology doesn't change now, automatically this will survive. So technically, can I say that this is going concern concept? I believe that my business is going to live for a long period. That is why I could invest my money in these things. Isn't it? है ना? So that is going concern concept, that the business is going to stay for a long period of time. We assume it and then we record things accordingly. Now comes the point which I've been stating every now and then. This is a part of a reporting stage. Accounting period concept. Acha everyone, if I give you your entire book, I just give you the entire book and I do not divide it into different chapters. There is no definition separately written. Everything is in one paragraph form. The entire page is in one paragraph form. And there is no specific index. There is no partitions. Will you read the book? I think I won't go the page past page 1, because if you are not dividing into different points there, how can I read the entire book in one go? That means, so that I am not scared about the book, they divided the book into, first of all, chapters. First of all, they divided the book into modules. Then they divided into chapters. In chapters, they have headings. And if the headings are too long, they also had subheadings. And if the subheading is also going too long, it is subheadings. Technically, this has made the book reading easier, isn't it? So if the book reading can be made easier, then why won't we make the accounting be easier? We will try to look forward to that. So accounting period concept says the business life of the business is way too long. It is just way too long. For a long period of time, the business is here to stay. Accounting period says let's divide it into different years. So this was year 1, this was year 2, this was year 3, this was year 4. Secondly, when people started maintaining the accounts yearly, people started maintaining according to their comfort. For example, I am a Punjabi. If I say, then I would start my year from Lodi. That is a festival that is celebrated in January. And there is someone who is a Bengali. They will say that, ma'am, we are going to start it from Durga Puja. If I go to someone who's in Maharashtra, they will say we will start it from Ganesh Chaturthi. Now the point is, if we all three sit together, can we compare the businesses? It's like comparing CBSE with ICSE and asking that who's scoring more, isn't it? The books will become incomparable. So that we can compare things, we will start things from 1st of April and we will end on 31st of March. Every year, no matter if this is your first year, even if you start from 30th of March, na, you will end on 31st of March, the next year will automatically become uniform. So whenever you start your business, just end your first year on 31st of March and then you will also fall into the uniformity. This particular format of financial year is also identified and adapted by Income Tax Department as well. So it is as per IT, Income Tax Department. So accounting period concept is to study the books of accounts yearly rather than studying the life of the particular business throughout that stretch. We're going to divide it into different pauses and we will study it accordingly. This is called accounting period concept. Last part that is left is called conventions. Okay. Now what do you mean by the conventions of accounting? I think we are left with 4 conventions and a couple of MCQs to look forward to. So I think I'll give it a halt here. So we'll be continuing with the conventions in the next class. We are meeting on every Monday. So every Monday I'm going to cover all these topics in detail, and along with that, everybody who has attempted earlier as well, the previous marathon is still available on the YouTube. You can practice it from there. And everybody who hasn't joined our batches yet, our JIB batches have just started. So that means at this point of time, if you join the batch, this is a good time to join because it started from this Monday only. So you will be able to grab all those things, you will be able to note down, and you will be able to understand the things at a greater pace currently. You know? So if you're looking forward to it, you can start from there. Rest, before I conclude this particular class, let's just talk about the conventions of accounting first. Conventions means anything that is already a trend that is going on in the mass market. Old things that have been still carried forward. For example, wholesaler and retailer. Wholesaler always gives things to the retailer on credit because they know that if the retailer will sell only, then the retailer will be able to pay them. So technically, in terms of the working, conventions are nothing but something that is already going on in the market, and these things were accepted by accounts. So they said these are called conventions. So we'll be talking about the 4 conventions and the MCQs in the next class. Okay. Acha. Now, before I end my session, I hope everybody would have seen our website yet or our app. The best thing is to download the app because in the app itself you are able to get more discounts, right? So let me just show you. Go on to the area of Adda www.adda247.com. Just a moment, please. Okay, there it is. If you go on to our website www.adda247.com, go on to the area of JIB and CIB. In this area, you will find JAIB and CIB Mahapack. So if you're looking forward to preparing both JIB and CIB, then why not take the JIB and CIB Mahapack? Rather, everybody who has just started their banking journey, you can also look forward to Officers Adda Mahapack. In this Mahapack, you are getting all of these things. That means you will get the entire JIB, entire CIB. Then along with that, you will also be getting bank promotion papers in it and even the certified courses. So that means you have got 4 different platforms all covered which are there for the bankers in the Offices Adda 24/7. Mahapack. So I think this is a win-win situation for people who are just starting. If you are already into this particular thing, then the bank promotion Mahapacks are also separately available. And in the JIB Mahapack, you will get only JIB, both English and bilingual, both the regular classes and the revision classes, both video courses and the recorded ones which are already done. Then along with this, the mock test series, revision test papers are also there. In the Mahapack, we have recently launched 10 plus hours of mini marathons, 5 plus hours of marathon or the mega marathon. Then we are also adding doubt classes, and we are also providing you practice papers as well. So that means you are getting currently a good opportunity to prepare for this examination. So if you are looking forward to it, then what you can do is you can click on the area of JIB and CIB. Click on the area of buy now, and you can use the code PREP80 here. Okay, so you can use the code PREP80 and you will get the discount here. So if you're looking forward to it, it would cost you 11,577.80, that too for 2 years. That means you are not even paying 700, 800 per month, which is definitely more feasible than if it comes to the many of the basic necessities that you're dealing with every single day, isn't it? So if you're looking forward to it, then kindly go ahead and check it out on our website or in our app for further details. Okay, so you can use the code PREP80 if you're looking forward to Mahapack. Now the point is, in the Mahapack, what are you getting? In the Mahapack, you are getting 1100 hours of online classes. That means your JIB plus CIB, 305 test series, 450 ebooks, and 1462 videos. If you buy this particular pack, available for 2 years, you don't have to pay a single penny afterwards. Once you have paid it, that means you are free. So this is a way better method to look forward towards your preparation. So this is your JIB ka Mahapack, JIB CIB ka Mahapack. This means this is covering the entire JIB, entire CIB, that too even electives. In terms of CIB, you will get 5 exams and you have to choose any one of them. So all those things are also available. All the particular 5 would be available for you, so that you can actually choose the one which is more better for you. So you can choose the best course, and then accordingly you don't have to pay any certain extra money for this. So technically, rural banking, HRM, IT, everything would be available. So if I talk about Mahapack 2.0, Mahapack 2.0 is definitely more interesting than the previous Mahapack, in which you get everything, but in terms of 4 different things that we have added just recently: marathons, mini marathons, mega marathons, practice paper, as well as doubt sessions. Acha, the doubt sessions will be held on 2nd Saturday and 4th Saturday. Okay, that means your holiday. So that means you will not have to worry about what you should do regarding the class and how do you take it up. So that means all those doubts of yours can be taken up, it can be catered well by us in our class itself. So this was JIB ka Mahapack, JIB CIB Mahapack. So only if you're looking forward towards JIB Mahapack, it is also available. This is JIB Mahapack 2.0. This will cost you, after 80% discount, it will cost you 6719.20. So again, a decent amount. You can get it for a period of, I think, 1 year there. Right? So normally it is for 1 year there. So this would be available for you. There are 600 hours of live classes, 235 test series, 250 ebooks, as well as 617 videos. So this is something that you can look forward to. Right? Double validity is going on. If the validity is for 6 months, you will get for 12. If the validity is for 1 year, you will get for 2 years. So depending upon your requirements, you can look forward to any of these packs. Kindly go ahead and purchase it as early as possible, because this opportunity is there for only a limited period. And also my JIB batch has started, so you can be a part of the batch by joining any of these courses. So kindly go ahead and hurry up, and we'll be meeting in our paid classes. Thank you everyone. And if you like this session, please go ahead and share it, and don't forget to press the bell icon to get to know whenever my new classes are coming. Along with that, the new YT planner is already shared on our community page, so kindly go ahead and check it out as well. Done, everyone. So I'll be meeting you on Monday. So I'll be meeting you on Monday. Along with that, I think we'll be keeping on and off different sessions. So I'll keep you updating about the same. So kindly stay tuned and keep learning and keep growing.